Hi everyone, I'm ℸ𝕒𝕗 with Coldwell Banker Realty, and I have Brandon Burns from Investors 1031 Exchange. How are you today?
I'm doing good, Sarah. Thanks for having me. This is great.
Thank you for coming. I know that we have a really great information to cover today. And tell us about why homeowners or investors need to have someone like yourself when they're doing an investment property and they need to sell it in order to avoid taxes and use 1031 exchange.
Absolutely. One of the most powerful things for investors that own real estate is a 1031 exchange. A 1031 exchange can potentially keep you from paying any taxes. You can fully defer those taxes, and the cost for doing a 1031 exchange is very, very low. You can do a 1031 exchange where you avoid all of the taxes, or you can do a partial 1031 exchange where you pay taxes on part of the money and then you avoid taxes, defer the taxes on the rest. There's four major things that you have to be aware of whenever you're doing a 1031 exchange, essentially four major hoops you have to jump through, right? So the first one is a timing component. As soon as you sell, 2 clocks start, 45 days to identify a number of properties that you may or may not end up buying, and 180 days to buy one or more properties. So there's a timing component. You have to purchase something that's equal or greater to the sales price that you sold minus one-time transaction cost. You also have to have the same taxpayer. So one of the things the IRS does is they say, hey, we don't want to have to jump across tax returns to kind of track these deferred taxes. So whatever tax number you sell under, whether that's your business, your personal, family trust, that has to be the same taxpayer that buys the next property, right? So they can kind of track that. You have to use a qualified intermediary, which is us. There are others, but hopefully we do a good job. And then lastly, you cannot take constructive receipt of the funds. So if the money touches your bank account, it's a taxable event. So we enjoy working with people that want to buy another piece of property and don't want that giant tax hit, right? Because the taxes are enormous. So there's a number of taxes that you might pay if you sell an investment property and don't do a exchange. Mm-hmm. First one is 15 to 20% to the federal government. Second one is your California state tax, which is right around 10%. Then you have a depreciation recapture, which is if you've depreciated the property, which most people do, you have to pay 25% of that back, right? Wow. So that's serious.
That's huge.
It's huge. Then also 3.8% for the net investment income tax, and that funds the Affordable Health Care Act. So when you add all that up, that's 30 to 40% of your total profits. And if you can avoid that, if you're going to buy real estate anyway, right? Why wouldn't you avoid it? A 1031 exchange fee is a little bit over $1,000. So mathematically, it almost always makes sense to do an exchange if you're going to buy more real estate.
Right. And how many times they can use this 1031 exchange?
You can use the 1031 exchange as many times as you want.
Okay.
The IRS doesn't actually have any timing language in the tax code. What they talk about is your intent, right? So your intent has to be to hold for long-term investment, right? How do you prove intent? This law has been around for quite some time. This has been part of the tax code for, I think, since the 50s and 60s, right? So over time, there's been some court cases that have happened, and through all of that, there's been a generally accepted 2-year mark where most CPAs and tax accountants say, hey, if you hold this property for 2 years, that proves that intent, right? So that shows that you're planning on holding it for long-term investment. If something were to change after that, the IRS understands that life events happen. So holding that 2 years is kind of key.
Okay, great. So, and how can people reach out to you?
Well, they should call you.
Oh, well, yeah, okay. My number is 858-405-9941. And what's your contact?
Let me give you my cell phone, which is 214-280-0908. But they should call you. You can connect us.
Absolutely.
It'll be a secret through Sarah.
I know, yes. So feel free to give us a call with any questions regarding that. I'll be happy to put you in contact with Brandon. He has a word of knowledge about all 1031 exchange, and I hope to see you soon.